Hey, what's up with you guys? This is Irfan here from smartincubator.com and welcome to another video. In today's video, I'm gonna break down some charts for you this time. I'm gonna analyze some charts because today is Sunday and I want to do some weekly analysis on some pairs on a higher time frame, so you can have some idea of what's going to happen in the next week. So these are all my predictions. I'm going to identify the trend and high probability order blocks for you so you can get yourself prepared for the next session. So I'm a scalper, as you know guys, and I only trade during New York session, so I don't really care about higher time frames because the only thing I do in the morning is to check a 5-minute time frame and then 15-minute time frame, and then after that I actually place my trades based on those areas on those two time frames. So that's why I'm not going to start this video with 5-minute time frame, because I'm not analyzing a trend. I'm not analyzing a trade for you. I'm going to analyze the whole market in general. So I'm going to change my time frame to 4-hour. I think it makes more sense to do weekly market analysis on 4-hour time frame, because you can literally see the big picture of the trend of the market, the performance, everything is actually more clear here. So I'm going to start with GBP. I'm going to start with the EURUSD on 4-hour time frame, so I can actually show you what is happening right now. So as you can see, guys, we have multiple breakout structures towards downside since June 9th, and as you can see, these major support levels have been broken. This one is broken, this one is broken, so it means that all these liquidities have been grabbed. So we have so much liquidity below this level, so much liquidity below this level, and this level, so they are all gone, and all these buyers got stopped out. And that's how the market is performing on a daily basis. It just wants to keep going to a certain direction to stop out buyers and sellers. So in this case, all these buyers got stopped out, and we have huge bearish candles, as you can see. So it came down, and we had a high probability demand zone here that got broken easily, and then the market started doing some sort of consolidation, and then this candle literally changed everything, because another breakout structure towards upside. We had a bunch of liquidity here as well. Why? Because there's a resistance level here, and each resistance level or support level, there's a bunch of liquidity below or above that zone. So in this case, this one is already gone. It did a little bit of correction, and if I want to use my Fibonacci, let's see if it respected my zone or not. Yes, look at this, guys. It literally respected the golden zone because it didn't close below the zone, which doesn't matter, guys. There could be as many shadows as the market wants to create, but as long as the zone is respected, then we can say that this zone is literally respected here. And if I delete my Fibonacci level, you see that I'm left with this zone here, and all these candles are inside the zone, just the shadow is out, which is completely fine. And then after that, we have a bullish engulfing candle. So if you are trading on 4-hour time frame, you could literally take your buy trade here, put your stop loss here, and then if you want to take it all the way to the next resistance level, to the next liquidity area, you could have literally done that and take a 1-to-2 risk to reward ratio, or just simply take your 1-to-1 and get out of the market like that. Super easy. I'm not trading on 4-hour time frame anymore, guys, but as you can see, the strategy is the same. Sometimes I do use Fibonacci, but most of the times I stick with high probability supply and demand zone, which is the best trading strategy in my opinion, guys. So right now it's in consolidation phase, and it created this head and shoulder right here. So it started creating head and shoulders and consolidation on 4-hour time frame. And I can't see any high probability supply zone around this area, neither here, but there's a big one right here. See this, guys? This is the last bullish candle, and this is the first candle that got out of the zone. The next candle after that never tapped into the zone, so there's a gap in between. So this gap makes this zone a high probability demand zone. So now, the next thing could be a breakout structure that's going to happen right here. So we have a bunch of liquidity above this area because all these sellers took their sell position here, put their stop loss here, and there's a liquidity here. It could be that we have a breakout structure here, we experience that, and it just reaches this level. If it respects the level, then we are going to experience a short signal, or just breaks above it and disrespect it. So, but I can't see any more high probability demand zones because this one is already filled. Look at this, guys. This one is already filled. because you take the last two if there's any, and then as you can see, this candle literally tapped into the zone, the same as Fibonacci, two confluences, Fibonacci level respected. We have a high probability demand zone as well, so two confluences literally at the same time. So it could be a beautiful trade and high probability and bullish engulfing candle. So three confirmations. So this buy trade could be with three confirmations that you could literally get in. So this is for EURUSD, guys. Consolidation means so many things. There are two scenarios here and here. So it could be above this flag and reach this high probability supply zone, or just simply break below this level and just keep going down for the liquidity around this area and this area. These are our major support levels here, as you can see here and here. These major support levels carry a lot of liquidity, a lot of stop losses. So that's why I'm saying it's very, very important to take it into consideration. So this is for GBPUSD. Let's get into GBPJPY. It's not the same scenario because the trend is definitely an uptrend here. We had a huge uptrend here, and then after that we had a beautiful correction, and it started after that it started going up again by creating higher highs and higher lows. So look at this, guys. We are in this phase right now, creating higher highs and higher lows, but in general the trend is definitely an uptrend. And then we don't have, I believe this one is not a high probability demand zone, or I think it is, I'm not sure. You gotta really zoom in to make sure it's not. Yes, see guys, it's a very, very tiny gap. It's a very, very tiny gap. If I draw it here, look at this. It's actually not tapped into this level. Look at this. My line is here, so this is the entire candle. This is the tip of it. And then this candle, the shadow, hasn't touched this zone yet. So I can certainly say that we have a high probability supply zone right here. So even if I cover the entire candle, you'll see that it seems like it touched it, but I think it's not, because if you really zoom in, you can understand that this is not what I'm trying to say. So this is very self-explanatory, guys, because as we are having an uptrend market like this, then it's very easy to predict that the price is probably trying to reach this level to kind of fill in the gap and change the direction if it wants to, or just break above it to grab the liquidity around this area and this area here, because this is very, very likely to happen. So this is for GBPJPY on 4-hour time frame. There's actually not much to say about it, because the trend is very, very obvious. But GBPUSD is kind of same as EURUSD. As you can see, this huge drop happened right here. So again, we had this huge drop that happened from June 9th, exactly the same as EURUSD, and then we experienced so many breakout structures towards downside, this one, and this one, and then after that, as you can see, it tried to recover all these leftovers that I call like gaps, and then it filled in all these gaps. So because when you have so many bearish or bullish engulfing candles back to back, it actually starts creating so many gaps, and it has to be like, you know, filled in eventually, but we don't know when, but it happened like immediately. So we had these higher highs and higher lows, and it finally reached the middle of the move and filled in the gaps. And then after that, it dropped a little bit, started consolidating, and then in my opinion, it's just, again, it could be, let me just show it with this trend line here and here. It's kind of a flag right now, but there are two scenarios. But this candle is a very, very strong one that the price probably wants to go further down, but you know, we can't judge like that, because consolidation could be like two ways. It either goes up and break all these structures here, or just literally goes down and have, like, you know, is going to liquidate all these buyers and go down further. So I can't find any high probability demand zone the same as EURUSD, because this one used to be high probability demand zone and it's already tapped in by this candle here. And then after that, as you can see, it could be a beautiful one-to-one trade. If anyone got it, guys, lucky you on 4-hour time frame, because I don't trade 4-hour time frame. It's kind of a swing trading. I don't do it anymore. And then for now, we just need to wait to see what exactly happens in the next week, because what happens is that even if you find a high probability supply zone or a high probability demand zone, you still need to wait for the direction of the market, because it can constantly change, you know, and it changes immediately. So you need to be prepared. You need to draw your zones and just wait for the zones. Don't get into the trade in the middle of the trend, just wait for the zones. So I'm not going to show you NAS 100, guys, because it's very, very unpredictable, and NAS 100 is mostly you know, we used to call it an uptrend pair because it was always towards uptrend, but right now everything kind of changed, and look at this beautiful consolidation that happened right here and a break of a structure towards downside. Again, we had this break of a structure towards downside, and then after that it's trying to recover and goes up to filling the gap. But again, if I want to show you a high probability supply and demand zones, there is nothing here because there is no gap. Even for high probability demand zone, there's only one right here. So we need to wait for a pullback for sure, because it's constantly going up with no correction, and it's actually dead wrong to buy it right here in the middle of the trend. So you need to wait for a pullback, guys. Even if you want to use your Fibonacci level, you can use it from here to where the correction wants to start, and you have this high probability demand zone as well. So be more patient. And even if I go to 5-minute time frame, as you can see, we had this consolidation, boom, goes up, correction, consolidation, boom, goes up. So, but there's a high chance, like there's a really good chance that it just drops immediately, because if you go to 4-hour time frame, you see that there's so much gap left over, so they all have to be filled in. So just be careful about NAS 100. So let's get into gold and finish the video by analyzing the gold market, guys. So gold has been crazy these days. It's just constantly going up and down, and I definitely don't trade gold on 4-hour time frame. If I do it on 5-minute time frame and 15-minute time frame, but I don't really look at it because we are using Gold EA Incubator that trades gold for us, so there's no point to actually trade it anymore. And here's the results of Gold EA Incubator on this $1,000 account, which is now $1,500. The highest was $2,000. We had this drawdown, but it could literally recover it in less than 2 weeks, I would say, from June 15th all the way to June 24th. And we are up 73% at this moment. So we changed some settings, some parameters inside the settings tab that kind of caused this loss from May 16th to May 17th. It wasn't the bot's fault, but one of our team members wanted to test something to see if it's actually working better, but unfortunately it didn't work out. We had this drop from here to here, but we're not worried because we know that this EA is going to kill it, especially with these new preset files that we recently released. So from May 17th all the way to June 24th, we are up 73%, from 40% all the way to 73%, which is still amazing despite all these drawdowns that we had. So for gold, guys, as I said, it's just constantly consolidating like this, and then we don't have any high probability demand zone around this area as well. We have this one that I can draw it for you, but I don't really pay attention to this one because it's so close to the main resistance level, and there's a bunch of liquidity above this level. So that's why there's a good chance that if the price wants to reach this level, it goes above this level, grab the liquidity, and then probably tries to reach this level, which is an actual high probability demand zone, or just change the direction of the market. It's just constantly changing, but I definitely keep you posted about gold. I do it every single day. If you check out our Telegram channel or even this YouTube channel, I talk about Gold EA Incubator, so you know how gold is performing. So guys, if you have any question regarding anything, especially Gold EA Incubator or like the manual trading that we are doing on a daily basis, don't hesitate to contact us by dropping your comment below this video, or you can simply check out our website smartyincubator.com. We have a live chat there. Ask your questions and we'll get back to you as soon as possible. Thank you so much and have a profitable week.